The term military analyst is not a legally protected term. It's not like doctor, it's more like economist. Any asshole can start calling themselves one and fart out a vaguely plausible opinion on the current situation.
So I'm going to piss into the hurricane. And the reason I'm being kind and pissing in the hurricane only to have it blown back on me, because I will help out some younger people out there. This video is not for the older people. If you have not figured out your financial shit by this time, I don't care. Fuck you. But this is for the younger people who are now, you might be a little confused. Like at the title is like, well, the stock market should always go. Isn't the stock market going up a good thing? Isn't that a good thing? Let me ask you this. Young people, old people, fuck you. You had your shot. I don't care about you people. I care about the young people. Are house prices going up a good thing? Right? Well, if you own one, sure. Is it really, though? What if you don't own a house? Right? Everybody thinks stock prices and house prices going up is a good. Well, it's going up. Good thing. Do you like it when groceries go up? Why is it we get upset when a gallon of gas goes up or groceries go up or rent goes up, but we seem perfectly fine when the cost of money and houses go up? And kind of the short answer is depends on whether you've already owned it or not and whether you are consuming it or not. That's it. And so when you look at consumables, groceries, gas, those are your daily operating expenses. You don't want those going up. If you already own a house, well, yeah, you want it to go up unless you own it. You don't own it. If you don't own it, asset prices, housing, stocks, bonds going up, well, that's not good for you. That's inflation. You have yet to buy it. And while you may hear on the internet or logic may say, well, the stock price is going down. And right now, this, by the way, stock markets have crashed. They've gone down in the past before. This isn't new. The context you're going to hear, Donald Trump. Donald Trump does not control the stock market. He might influence it a bit. Certainly government policy might. And you could say the tariffs are definitely having an effect on that. But let me ask you this. So what? If you're a young person and you haven't already adequately invested into a 401k or an IRA, don't you want stock prices to go down? Would you like housing prices to go down? I bet you would. Even though it goes against my best interest in the general interest of the economy in the country, yes, I want housing prices to go down so people could afford housing. And the stock market is the same way because, well, okay, what do I really care about the stock market? You should care about the stock market, even if you don't invest in it or have invested in it, because that's largely what you're going to be using for your retirement plan, whether it's a 401k, IRA, even your pensions. Usually all that money you contribute to those plans are then invested across a wide array of mutual funds and stocks and bonds and everything else. And so while people are complaining, oh, the stock market's going down. Dude, I want it to go down. I'm not on the cusp of retiring. Are you on the cusp of retiring? It would never happen. But in the ideal world for you, right? Let's say you haven't retired yet and you're not even on the cusp of retiring, right? I still have I'll probably never retire, but I got about 20 years before I start withdrawing from my IRAs. Let's say you're a young person, you're 23. You want the stock market to crash to zero. That's what you want. If you're still accruing investable assets, you want to crash to zero, buy all the stocks and everything for free, and then stay at zero. So you keep buying all the stocks for free. And the day before you retire, it jacks up to a billion, trillion, zillion points, and you sell it there, right? That would be the ideal world. Now, stock markets don't go like that. But what I'm trying to do is get you to understand in your mind that when stock prices go down, when housing prices go down, when investable asset prices go down, that's good, especially for young people or people who hadn't invested in the market as of yet, because in the case of housing, it makes obviously housing more affordable. When it comes to the stock market, it makes your retirement more affordable. Now, the problem with the stock market is you buy stock for 30 and then 20 years later you sell it for 60. You're not really buying the chance that it goes up in price. Technically, what you're buying is the hope that the earnings grow. Like you pay $30 in a share of stock. That share of stock will pay you a dividend or you're entitled to part of the earnings of the profits of the company. That's technically why you really should be investing. I'm not going to go into that. But when like right now, the S&P 500, it's at 50. Hang on, I had it up here. 500. I had it. Let's do a month. Okay, let's do 6 months then. Right now it's at 56.38 and 38. You don't know what that means. Like, what is that? That doesn't mean anything without being able to compare it to the earnings that you would earn had you bought one share in the S&P 500. And the S&P 500, like if I say, $750,000 for a one-bedroom house, he's like, that's ridiculous because you know what a one-bedroom house is. You could compare what you pay versus what you're going to get. When it comes to the stock market, well, wait, what exactly do you get? Well, technically, you get earnings. So what will happen is, what do you care if the S&P 500, the Dow Jones Industrial Average, right now is at 5,600? Well, if it's at 5,600 or 4,600, what do you care? What is it? What do I get if I pay in and I buy in at that? What you're trying to buy in at is a cheap and affordable retirement. Right? If you can buy the S&P 500, let's say it dropped down to 4,000, right? That'd be a 30% drop. And you could say, okay, well, what do I get? The earnings, I get a share of each one of the 500 companies that compose the S&P 500. I don't want you thinking like that. I want you to think, ooh, that's 30% off for my retirement. That's a much easier way to understand the stock market, at least from a normal everyday person who would be investing in the stock market for retirement planning, which is going to be the vast majority of you. I wouldn't worry about, well, what are the earnings of the company? What are the dividends? Unless you are a fundamental investor, and it's not going to hurt you to learn those things either. But right now, the S&P 500 is at 5,600. It was about a month ago at 6,100. So it's off about 10%. That translates to you, hey, my retirement is 10% cheaper. So if you're an old timer, yeah, right. If you're a baby boomer, you want all the stock prices going up to forever so you could sell and buy a fourth boat. You want your house to go up forever so you can, I don't know, continue owning your 5-bedroom, 4-bathroom house, even though it's you and your wife that hates you. And I don't know, maybe you might want to sell that to a larger family or downsize. And I don't know, maybe you'd like to let young people live in houses for you. This is just me. This is just me. Right? They want their prices to go up forever. You, especially young people, you should be cheering for a stock crash. You should be cheering for a housing crash. And yes, that would hurt people who are older who have retirement savings. It would probably hurt me. I'm closer to retirement than I am further away. So even though it would kind of go against my interest, but I'd be like, dang, the stock market dropped by 40%. Hell yeah. Unless there was some horrific like nuclear war, then maybe I wouldn't think about it. But yeah, and this is not financial advice, just to show you I practice what I preach. The stock market, I bought some S&P 500 shares last week. And it came down a little bit more. Now I guess I'm kind of broken even on that. But yeah, the stock market going down is a good thing, especially for you younger people. This doesn't mean talk to a financial advisor. I'm not saying go buy some now. That's not what I'm saying. I am merely that's where you talk to professionally, find out what you should be investing in. That's what professionals are for. I'm merely making the philosophical and economic point that whatever they say in the media, especially if you're younger, no, you want the stock market to crash. Donald Trump, if you believe he controls the markets, he's doing you a favor. It's part tariffs. What is it? Why had this? Did we have a bunch of earnings? Come on, there's a billion reasons the stock market. Well, okay, let's look at stock market correction. This is a correction. Oh, look, already they the New York Times, like S&P 500 since the election. As investors sour on Trump. Okay, so the New York Times is going to blame Trump. I'm not saying the tariffs they do have an effect on that. Tariffs, I think that's a little bit overkill. Tariffs of 25%. That's not going to lower your profits by 25% or 10%. Black swan event. Really, you're already talking about a black swan event? Overvaluations. 2008 interest rates are higher. Oh yeah, Target and Walmart have come out with retail is weak. So there's as is always, there's multiple reasons the stock market to crash. Dude, you don't care prices can't. Would you, okay, let me give you another one. You ready for another one? Ready for another one? Would you like it if car prices went down? I bet you would. I bet you, dude, those three things right there: cars, housing, and retirement. Those are your major. Well, tuition's a major thing. Would you like if tuition went down? That's an asset, right? Like you can't put a price on education now, can you now? Yeah, I can. It's called zero. And in defense of Trump, he wants to offer a free public school through the federal government that's accredited online. He's not the devil reincarnate. Still has some issues, but he's not as bad as everyone's trying to tell you. The point is, a car, right? That's a consumable item technically in the long term, but it's a large ticket item. I'm sure you would like your car prices to go down. Maybe you own a car and the car price goes down. What do you care? Especially if you're going to drive it into the ground, right? This is why you shouldn't be buying fancy cars anyway, but that's just me. But would you be happy if car prices dropped by 50%? Would you be happy if housing prices dropped by 50%? Would you be happy if technically an education is an investable asset? Would you be happy if tuition prices dropped by 50%? Then stop lending kids money and tuition would go down. Never mind. That's a separate issue. I bet you really be happy if it did go down by 50%. Then you should be equally happy that the stock market would go down by 50%. Because now your retirement just became 50% more affordable. So there's a lot more to it than that. I strongly recommend there's plenty of courses out there. I used to teach one. Actually, it may still be out there. Stocks, bonds, investing, oh my. Look up that course. I don't own it anymore. I sold it to a company called Cengage, and now they offer it, or they at least used to offer it through different community centers. Search stocks, bonds, investing, oh my. Okay. If you prefer, it's not even a video course. It's just a reading course. It's an online course. If you wanted something, probably what's going to be a little cheaper than that is I have a book called Bachelor Pad Economics. And that goes through all the major and minor financial decisions you're going to make throughout your life. In addition to what is the S&P 500? How does the stock market work and all that? It's a pretty thick, thorough book. It's like $20, $22. I don't know. The audio Kindle. I would get the paperback because there's a lot of charts. Audio, sure, but you don't get the charts with it. But the larger point being is it's worth it because the public schools sure the fuck aren't going to do it for you. And neither was your college degree. No one's going to teach you about personal financial management. And I have that book, Bachelor Pad Economics. There's a course out there called Stock Bond Investing, oh my. And then also I have linked below a link to my teachable courses, which generally are about minimalism, personal budgets, things like that. It's not financial planning. But if you have trouble spending money, there's a couple courses there that might help you with getting that in line. The main one is Achieving Financial Excellence. But whether it's my resources I listed there or just a good book or any YouTube videos, go educate yourself on things like retirement planning. What is a 401k? What is an IRA? How does the stock market work? There's an old video. How does the stock market work? I think it was done by the animators at Disney. It's an excellent job. Maybe that's how the economy works. Well, in any case, yeah, but as of right now, yeah, it's a good thing the stock market's going down. You want to go down first. This is like a golf score. You want as low a score as possible. And the very last day before you retire, you want to go up to $1 billion trillion dollars. All right, we got one super chat. Real $5, Cappy. How are you gonna invite Dre of all people to play D&D? You know, every session will end up with him trying to get you to play a dwarf. Hey, Dre is he's a regular and he's a good friend of the show. And I gotta imagine he's over there in Asia. He never told me exactly where. He's in Asia. Big, tall, black dude in Asia. Working for contractors, and he likes it over there, but I'd imagine he'd like a piece of America digitally where he'd come play D&D with us nerds. online. So, just because I remember traveling overseas, just doing a lot of traveling by myself, even within the US, you gotta get lonely a little bit. But yes, no doubt there'll be many short jokes on the D&D. So, all right, links to that stuff below. We'll see you guys later. Toodles.